joining us. Mr. Michael Block is here this afternoon. And Mike is a longtime source of mine, now runs a company called Agent Smith. Mike, we haven't talked in a good bit. It's great to see you again, sir.
Great to see you, Oliver. Great to be here. Great to be here with Agent Smith.
Yeah, tell us about what you're doing.
Yeah, so Agent Smith was an outgrowth of some of the work I did in venture capital. My venture capital partner, Dan McCooey, and I, Dan's also a Wall Street veteran. We had the good fortune to invest in a company founded by Pulkit Jaswell in the predictive AI space. Pulkit was an serial entrepreneur in the drone and robotics space, and then predictive AI. Dan and I invested in a company of his called NWO.ai, which has been very successful. It's a predictive AI company. And then about a year ago, he said, how about we use predictive AI to look at markets and create investment insights? And thus, Agent Smith was born with myself, Dan, and Pulkit. And we provide a platform that uses predictive AI and advanced AI techniques to automate certain parts of the investment process, whether that's macro, sector level, sector and ticker level, or looking at technicals. Anything that's going to move markets is what we want to capture, and we do that in a very unique way for any users and clients.
Well, you've always had a unique way of looking at the market, so I'm sure you've kind of brought some of that perspective over. How much is subjective from your guys' side on kind of the data that you feed it, and how much of it is just sort of a beast, a wild beast on its own, where you set and let it run free?
Well, look at our name, Agent Smith, and that refers to the fact that we've created, autonomous AI agents. We tell them we want to get the full macro picture, and taking the gamma levels, taking the macroeconomics, taking bond markets, and then we let the agents do the work. It's almost like they're writing their own code to figure it out as objectively as possible. Now, that objective part doesn't just mean mechanically, robotically looking at fundamentals or economic data, right, Oliver? Mm-hmm. It means looking at all the opinions and emotions out there in the market. And I think in terms of encapsulating and integrating all of that, that's really where we look to excel and provide better value for our users.
And are those users like money managers who are trying to figure out how all the pieces of the complex portfolio fit together, or are there individual investors that can harness this for their own sort of trading approach?
Well, we have started marketing to institutional investors and to broker-dealers, research providers, wealth managers, such as those who work with Charles Schwab, of course, family offices, really anyone who's looking at investments, everyone from an individual investor all the way up to the world's largest pension and sovereign wealth funds. So this is really something that we are marketing, to everyone eventually. We'd like to be ubiquitous. We're 3 months in, so we'll get there.
All right. So tell me about kind of what it's reporting as the main driving force right now. Our sort of own human read on the market is that the macro's kind of dropped a little bit to the second. It's kind of like every day just looking at NVIDIA as your starting point, your kind of cornerstone right now in the chips. I mean, is it that simple? Is it going to get harder, Mike?
Well, it always changes. So if you expect that things are going to stay one way, then maybe that becomes difficult. And yes, it has been all about tech, hasn't it? We try to take this approach, and we actually have a macro agent, Agent M, who specializes in kind of giving the morning report every morning at 5:45 a.m. They have ready for our subscribers a full look at the macro picture, taking everything into account. Now, obviously, coming into today, we're focused on the upcoming data, the upcoming earnings. Most pertinent, of course, was the 10 a.m. testimony that Jay Powell gave. So the thing that Agent Smith does and Agent M was pointing out was, look, a lot of this always comes down to support levels, resistance levels, and what the important gamma levels in the market are. Where are dealers positioned in the option market in major indices and ETFs? And this morning, one of Agent M's big takeaways in terms of the game plan for today that he gives every morning was that 1550 in the S&P 500 cash was a very important level, and if we held that, things would look good. Sure enough, we had this testimony where Powell didn't really do much of anything. I joked maybe the dog ate Powell's homework, but he didn't do anything to rock the boat. He acknowledged slowing jobs growth as we expected he would have. Didn't really commit to doing anything in September, even if the money markets are telling us right now that it's a 73% chance of at least one cut by September. So with that, 1550 held, as you pointed out earlier on your broadcast, tech continues to show leadership. We're also seeing stocks like Citigroup strong today ahead of its earnings on Friday. It's making a new 52-week high today. So, a lot of broad-based strength here. And, really, when we look ahead to Powell, I know Kevin said earlier, we get the, less smart group, as he put it. Those his words, not mine. Coming up tomorrow, let's see, let's see what comes up in Powell's Q&A tomorrow. And then, of course, we're looking at the big CPI on Thursday morning. And the question becomes, what's going to happen coming out of that?
Okay, so CPI in the context of what we heard from Jerome Powell, how do we know if it matters to markets right now, Mike, when there's no August meeting and it seems like July? I mean, I don't know. Is there a number, like a crazy black swan, the blackest of swan numbers that could make a move in July necessary? Because if not, then what volatility could it put into markets when we've got months until September?
Right. So here you are saying there's no meeting. There's a lot of complacency. Powell keeps towing the line. Tech leads no matter what. So what could possibly go wrong? Now, Friday, we have JP Morgan earnings, but, JP Morgan, our friends there, being very erstwhile, looking at option markets, much like we like to at Agent Smith,
they
pointed out this morning that there's approximately a 90 basis points moved priced into the CPI on Thursday morning, meaning the market's probably going to move at least plus or minus 1%, according to what the options market is telling them. Interesting. So, in other words, if we're looking for a 0.3% up month over month in that core CPI plus 3.4 as the consensus for year over year, it's going to take some big aberration there. And they tried to game out this morning, and we were able to interpret that through Agent M's eyes. If there's a 0.2 move, then it means this is going to happen. If it's a 0.1, I would say if there is something below 0.2 month over month, that's going to be a big move. If there's something that's higher than 0.3, we could get some knee jerk to the downside where it's like, it's time to be hawkish again. Forget about those 73% odds. Maybe that would go back to the 60s or something like that. We need to really watch those moves. One thing that we've learned at Agent Smith, watching these markets and our autonomous agents giving us guidance about the way stocks move, is that a lot of times that when we talk about prices that a stock could go to, we call it the price of least resistance.
Yeah.
And option traders will really appreciate this because it's almost like it has to go to that strike, almost give that strike a kiss, that 90 basis points or 93 basis point move that JP Morgan's pricing in. And then we really have to watch. Did something really change? Or is this options market, trickery going on where it's gonna hit that level and then snap back? Because one thing that we find over and over again, and our autonomous agents unemotionally detect this and think about this really well, whether it's the option specialist, a macro specialist, or a technical specialist, Agent Q, they're really good at thinking through those issues and seeing that. So we're going to be watching that. It's going to take one heck of an outlier number. I'm talking something along the lines of 0.5 month over month, something like 3.7 year over year.
To really move the needle.
Of course, the downside, it's the same thing. So we're going to really have to see. But again, don't be surprised if we get some kind of crazy knee jerk that gets you right where JP Morgan's going. They know what they're talking about. They know how to analyze option markets. They have their earnings Friday, so we look forward to hearing from them and Jamie Dimon. Of course, that's a whole other topic.
Love it. Let's chat some more on earnings, Mike. Great to catch up. Love the insight and the connection to what you're seeing and hearing and what your own machine is spitting out. So we'll be in touch.